What's up, traders? Matt from the Trade Brigade here doing a technical analysis on ticker symbol XELA for Exela Technologies. Now, jumping in, we have the daily time frame chart on the left, and the 30-minute intraday time frame on the right-hand side. The first thing to point out is obvious areas of support and resistance. So on the daily time frame, we certainly have resistance up above at $3.07. You can see all of these upper wicks wicking right off of it and leading to some pullbacks every single time. So noteworthy to have that on your charts. To the downside, we certainly have support just underneath us. And the reason I'm picking out $2.68 is because it was just about the highs of this 3-day balance, and we respected it to the T in this morning's, early morning pullback there in the first 30-minute session of the day. Underneath that, of course, the 3-day balance lows will be in play around $2.50. Jumping over to the 30-minute time frame chart now to talk about, potential levels that we've missed and or trade opportunities from a shorter duration perspective, I would certainly make the argument, just zooming in a bit here, that this is, strikes me as different than what's happened in the past. You can see a number of times we've come in, we've sort of backed off hard into the end of the day here, backed off hard into the end of the day and subsequent days there, but this is kind of just holding neutral after this gap, small gap up and go. So it certainly filled the gap to the downside, but holding here as opposed to seeing what we've usually seen, which is a fade back lower. If I just throw the Fibonacci's on here for a brief moment, you can see that if we go from low all the way up to the high, we're kind of, accepting price right in the bulk of that range of areas that we'd like to see respected as pullback areas. So that being said, where does the opportunity lie? Probably a long over the top of this most recent pivot high to revisit that $3.07 mark. So a long over 292 could bring you up to do something like that. Note the 200 SMA will be there as well. Critical resistance there. And then to the downside, right, maybe you look for this to hold at $2.79. So, neutral on the consolidation here, long up and over $2.92, and kind of avoid the long-sided trade if we start to break down underneath $2.79, simply because we would be returning back down towards that 3-day balance. And when you return back to balance, the target is always the bottom end of the range. In this case, it would be around $2.51. So I hope that was useful in terms of how you might navigate this into the upcoming week. I would also like to point out that targets up above this $3.07 mark are kind of spread out, right? So way up here, we have something at $3.79. There's a lot of meat on the bone should there be a larger breakout over $3.07. And again, I'm not saying that it has to break out and go there, but if you do take the trade long, maybe hold on to a piece over 307 just to see if you get any continuation. Slight bump in the road, again, if we just think about how technical should work, prior area of resistance, then turn to support here. So I would also keep $3.54 on your radar, but just looking at the chart here on the left, the daily perspective, that's a lot of meat on the bone here, especially on a stock trading at such cheap levels. So huge percent moves available in something like Exela. And as we've discussed on this channel in past videos, whenever we're talking about things sub $10, it really comes down to managing risk with your position size, since again, you're going to be taking massive hits or wins. Don't forget, it goes both ways here, but massive percentage moves when you're dealing with things at such a cheap price point. So all of that being said, if you enjoyed the video or learned anything new, let me know down below in the comments section or by simply leaving the video a thumbs up. Don't forget to check out our main channel, link down below in the description. And all of that being said, I wish you a green trading week.